Welcome back. South Africa's recession already getting reaction from international banks, and Uber says it's almost ready to share its ride-hailing service with the market. Mateo Coripe joins me now to discuss this and more. Mateo, let's start with the all-important rand. That decline is not looking good. Tell us why.
It's not looking great because it's touched levels that we last saw about 2 years ago. I mean, at 20 rand to the pound today, I mean, a number that we haven't seen, quite recently. I mean, if you are traveling or looking to travel anytime soon, exchange the rand to other currencies, it's really going to hit your pocket. But, it's a reflection of what's happening currently with the economy and also what emerging markets have been experiencing. We know that the U.S. is also expected to put on tariffs against China again, which is likely to put more risk on emerging markets like South Africa. So a lot of investors are doing a wait and see, and some taking profits from the rand, taking advantage of our bad situation with the recession.
Yeah, and international bank Merrill Lynch has revised its growth forecast for South Africa. Tell us why.
So we saw what Goldman Sachs did yesterday. They had earlier this year, forecast about 2% for the South African economy, quite positive. But after the recession yesterday, took it down to about 0.8%. And this is the bank that was backing the president to say, with the policies and the kind of man that he was expected to be in this economy, he would bring a lot of change. Merrill Lynch, after assessing what had happened yesterday, saying that South Africa still faces some risk going forward. They predict that during the midterm, South Africa will announce that, they can't spend as much as they had promised in terms of fiscal consolidation, and also that, with all this happening and all these bad things happening, the ratings agency won't necessarily downgrade South Africa in November. But should this continue into February, when we do table our budget, then they expect that, the likes of Moody's and S&P will downgrade South Africa then. So they at least expect some reprieve for the country. But they say if policies are not dealt with, if the country is not, pushing the economy into a better space, then we should expect a downgrade maybe early next year.
Yeah, and Uber says it's ready to list. I mean, everyone will watch that quite closely.
Definitely, it's a business, and every tech business now, if you look at it, is really doing well on the market. There's a lot of great response. Looking into the future, a lot of futuristic companies are the ones making the big bucks. It's been able to raise about $22.2 billion for that initial public offering on the New York Stock Exchange. Of course, there's always some skepticism on technology companies because a lot of things can go wrong. As we've seen with Uber, it hasn't been able to go into some countries because of some regulations and competition, so they'll have to convince the market of that. But it's a company that's in a lot of countries and have got a lot of traction, so its business case is quite there, and I believe it should be listing very soon this year.
And here's one that's very interesting. Government South Africa is saying it's going to launch a payment system where you can use your watch to pay. How is that going to work?
It's an interesting time to launch a product like this because the watches themselves are expensive. The highest range at around 13,000 rand. And they're launching this with FNB private clients and FNB POS systems, point of sale systems that are there. So you'd have to tap your phone in a point of sale system. This system will work the same. You'll just choose the credit card that you want, put in your passcode, and then put it against the POS system, and you'd be able to pay. But they say they are looking to get more networks on board as well and other banking systems. But FNB apparently has the infrastructure already that they need to do those Visa payments using credit cards and your garments. So when you do go for that run, you can, get yourself some water and some healthy breakfast on your way home.
Oh, great, because you don't have to carry a wallet then, because nobody carries their wallet when they're running. Exactly. Thanks for that. Appreciate it, Mateo Coripe. Now, the ANC says it fears going into next year's election in a recession. The party is calling on government to immediately release stimulus packages to boost the economy, which has contracted by 0.7%. Aldrin Sampier reports.
The stimulus package must be activated immediately.
While there's a sense of urgency in Kotongwana's remarks, the details of the 48 billion rand stimulus package are yet to be announced. The business sector may have to wait until next month's midterm budget policy statement. That's when Finance Minister Nhlanhla Nene is also expected to announce economic structural reforms. Kotongwana says concerns about policy shifts are unwarranted.
These interventions do not necessarily require the development of new policies.
Any policy reform could further increase investor anxiety, as is the case with the land question. But the ANC says its position is being confused with that of the EFF.
Our approach on expropriation without compensation is not nationalization, but expropriation for redistribution.
At the end of all this, whether it is the land question or the state of the economy, the ANC is cognizant that a lot is at stake.
There's demonstrable evidence across the world that there's a correlation between economic growth and electoral support. It's not only a South African phenomenon. Obviously, we would be worried a bit if we were going to go into an election with an economy in recession.
Aldrin St-Pierre, Johannesburg.
Well, South Africa's dip into recession in the second quarter is confirming that consumers are under pressure. There's been a spike in the number of people who are approaching debt counseling services. This is telling of an economy that's seeing declined growth. Chief Financial Officer at Debtbusters, James O'Hockey, joins us from our Cape Town studio. James, thanks for your time. Appreciate it. So how bad are things? You're seeing an increase in the number of people needing help to pay debt, right?
Yeah, we're seeing some very scary statistics sort of in Q2, which are in line with the recession in the economy. 30% increase in inquiries, people looking for help with Debtbusters, looking for debt management services. And to give you a bit of bad news as well, it hasn't got any better in July and August. We're continuing to see significant increases in terms of inquiries, people looking for help with their debt.
No doubt. Of course, we're in a recession, a clear indication that consumers are under pressure. At what point do people actually say, I need help, and come to you?
Unfortunately, it's very often that it is too late, where they're spending almost all of their monthly expenses, all of their monthly income on their expenses and debt, and they actually cannot afford to pay for their debt, and they come to us too late. Very often they end up with payday lenders or payday lenders like your Wongas of the world, and they unfortunately are in a big problem where they cannot actually pay for their monthly living expenses.
Now, that's the thing, though, because we see more and more people getting loans, small loans. We see people getting credit cards, even though they're in such a negative and bad space in terms of their debt. Don't we have laws protecting people from that? Why are banks and loan companies doing this when they can see that people can't afford to pay?
It's a good question. I mean, there are laws that do protect the consumers. And at Debtbusters, what we do see, though, is that most of the big lenders do adhere to those laws. However, it is quite a lot more complicated than that, in the sense that consumers often will, shall I say, won't be as truthful as they should be in terms of the information they supply to those credit providers, and they end up getting those loans. And we also have a culture in South Africa where people fuel their living through loans rather than saving up to buy those sort of big things that they should be.
So let's talk about what happens when you're under debt review, because it's obviously something that's seen as being very negative. But how do you help people in that regard in terms of paying off their debt?
It's quite interesting in terms of the market. Debt review is seen sort of in a negative light. However, at Debtbusters, we've helped tens of thousands of people get out of debt and get back on their feet. And if it's a process that's done appropriately with a reputable company, debt management company like Debtbusters, it can actually help consumers greatly and allow them to get back on their feet and feed their family. The simple way that we actually do that is we do a full budget and financial analysis with the consumer to understand what they're spending on a monthly basis on their general expenses and their debt. And then we have a look at what they can actually afford from a a debt perspective, and then we renegotiate with all the credit providers and banks to make sure that that consumer can afford to pay their debt and afford to pay their monthly expenses and feed their family.
Yeah.
And it's a process that is not easy. It needs a consumer to take a step back and cut certain things in their lives, but you can make a good decision for the long term. And it's quite interesting in the sense that the average South African consumer is probably very much in line with the South African country in terms of taking out too much debt, very often expensive debt, and we all need to tighten our belt and make a good decision for the future.
All right, thank you so much for your time and your insight. We do appreciate it. That was Chief Financial Officer at Debt Busters, James O'Hockey. Now, every second, 12 people become victims of online identity theft in South Africa. And it's mostly online purchases and social media that cause many data breaches. Businesses are now trying to deal with risks to ensure they don't compromise on customer experience. Heidi Jokos has more.
With the click of a button, you can have goods delivered to your doorstep. Applications for a home loan or a new bank account can be done through online banking. The digital era has exploded and has created a more tailored experience for customers, and businesses are flourishing.
I think when we look at the global environment and the global customer, there is a change happening that is faster than we've ever experienced as organisations and consumers. So in terms of the digital explosion, online retail, e-tail, online banking, financial services, this has evolved in the last 10 years from a banking system that's been thousands of years old. What we're actually seeing in the marketplace is a migration away as consumers from the high street, from walking into the bank, from making those selections on holidays. It's all online.
Digital's changed everything. The data that is being able to be captured about customer interactions, their preferences, has allowed companies, the successful companies, to make very tailored offerings and almost know their customer before they come in. It's really raised the game for everyone.
But there is a big security risk.
Our data is everywhere. How secure is it? Which organisations are using your data? How are they using it? Security of your consumer data and fraud is a pandemic issue that we're facing into today. Every second, 12 identities are being stolen in South Africa and being used on a variety of different fraudulent activities.
It is believed the majority of hacking happens at a very young age during gaming. This is then often channeled into serious hacking and data breaches.
80% of breaches occur from under 21-year-olds who are doing it for fun. People say, how? Like, they must be geniuses, they must be savants. Google. If you go to Google and you know the right keywords to type in, you're instantly exposed to this is the problem that we have today, accessibility and availability. Because people don't understand, these aren't geniuses that have spent tens of thousands of pounds to extract value. These are people laying around.
Businesses have had to adapt to keep up, but appear to have taken on the risk to please the customer. Heidi Jokos, Johannesburg.
Coming up in NewsHour, the public broadcaster is in a financial mess, but guess who's coming to rescue it? Yes, you guessed right. The SABC gets a government guarantee of more than R1 billion. We explore the ramifications of that in a moment.